Welcome back everyone to the Audacious Money Witch channel, where we talk about the magic behind the stock market. Yo, what's good guys?
Trump talking 1929 depression.
For the U.S., these are the highest tariffs we've had since the Great Depression.
Brutal jobs report is putting the White House on its back foot.
A stunner of a report.
Worst 3 months of job growth since the pandemic. The numbers so bad that President Trump declared them fake.
Half of entry-level white-collar jobs disappearing and 10 to 20% unemployment in the next 1 to 5 years.
It's very similar to what happened in the 1930s.
Over half of all industries are already cutting jobs.
U.S. banks' unrealized losses have soared to 7 times 2008 crisis levels.
You look at the issue of how the Federal Reserve is losing billions of dollars.
Their expenses are greater than their income. They have lost money every month for 33 months in a row. A pretty interesting record for the greatest central bank.
And honestly, it's been a whole vibe, but while everyone's freaking out, there's one stock that's on a tear, a coffee company, no less. And get this, it's not Starbucks. We're talking about Dutch Bros. You've probably seen their drive-thrus, but you might have heard that their stock is way too expensive. People are saying it's too rich and that the rally is over, but no cap. They're looking at the wrong numbers. In this video, I'm going to spill the tea on why this is a now or never situation for Dutch Bros. I'll show you the crazy chart pattern I'm seeing, the specific price I'm looking to buy at, and the secret ratio that proves this stock is actually a steal. So grab your favorite drink and let's get into it. The Bros takeover. First off, let's talk about the crazy market conditions. While most restaurants and coffee chains are down bad.
We look at the biggest loser today, it's going to be Starbucks. It's among the worst performers in the S&P 500. It's down double digits.
There's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value that we provide.
They were banking on a consumer that looked a lot like the 2022 aspirational consumer, not a value-seeking consumer.
2024, however, has broken that streak as the company reported 2 quarters of consecutive earnings misses. Q3 earnings per share did meet Wall Street expectations, but missed revenue expectations by $130 million. At the end of July, the share price was still down more than 15% since the start of the year.
I think what we are seeing is pressures on the wallet for some of our most occasional customers.
It had another issue though that was interesting, high rates of incomplete orders in the mid-teens on its mobile app, and mobile order and pay has become increasingly important for Starbucks. So people would hypothetically kind of put in an order, see the wait time or perhaps see the price, and then not complete the order.
We are holding share in the US. We are still the largest player in out-of-home coffee. If you look at some of the metrics that we have...
Donuts and Tim Hortons said you are not holding share, sir. I regard them as being seminal companies that are just as good when it comes to... McDonald's says you are losing share.
Why is it taking perhaps longer than expected for these positive indications and your turnaround actions to show up, I guess, more clearly in the top and bottom lines?
Yeah, hey, Brian, good to be with you. Here's what I would tell you. When I got here about 10 months ago, we said we were going to get going on this back to Starbucks strategy, which really is founded first and foremost on resetting our operating platform. Unfortunately, I think there were some choices made before me that really set us back on our ability to create that great customer connection between our barista and customer and provide the type of customer service that the Starbucks brand, frankly, is known for and should be known for.
Tell investors on when U.S. same-store sales growth will return to positive.
Yeah, look, I think, what I was trying to share with everybody is when you get this operating model in place.
Dutch Bros is thriving. The recent Q2 earnings report was absolutely fire. They crushed it, with revenue up a massive 28% year over year. But here's the most important part. Their same-shop sales grew by over 6%. That's not because they jacked up prices. It's because they had a 3.7% increase in customer transactions. People are literally driving out of their way to get their daily fix. Now let's look at the competition. Starbucks. Most recent Q2 report showed their comparable store sales were down, with traffic in the U.S. declining, while Starbucks is struggling to figure out their whole vibe. Dutch Bros is straight up stealing their customers. They're built for the drive-through game, which is perfect for a time when people are trying to save money and just want their coffee on the go. This makes their business model super resilient, almost like it's recession-proof. The chart, the pattern, the price. Okay, let's get into some technical analysis, but don't worry, I'll keep it simple. If you look at the chart, Dutch Bros stock is forming a classic cup and handle pattern. This is a super bullish technical pattern that suggests the stock is consolidating before a major move to the upside. Right now, we're in the handle phase of this pattern. The stock is finding its support level, and for me, the logical entry point is right around $58 to $59 per share. That's where you buy at the support. It's an area where the stock has historically bounced back, giving you a good entry for the long term. Think of it like this. The stock price is on sale, but only for a limited time. You've got to be ready to snag it when it hits that price. This is another long-term hold for my portfolio, and it should be a key target in yours too. CPG, energy drinks, and the future. So what's the next big thing for Dutch Bros? The first major catalyst is the consumer packaged goods CPG line they're launching in 2026. This is a game changer. It means you'll be able to buy Dutch Bros products in grocery stores, which opens up a massive new revenue stream. It's an easy way for them to grow without building new locations. The second part of this is that Dutch Bros is perfectly positioned at the intersection of two huge trends, coffee and energy drinks. The energy drink market is projected to grow from a $52 billion industry in 2024 to over $73 billion by 2032. Look at stocks like Monster and Celsius. They went absolutely insane. Dutch Bros is already a staple for its energy drinks, and this positions them to be the next big winner. No cap. Even people in recovery for addiction often switch to coffee and other caffeine-based drinks to help manage their cravings. This makes it a need-based, not just want-based product. The valuation is a lie. Now let's address the big elephant in the room. The valuation. A lot of people see Dutch Bros PE ratio and think it's way too rich, but honestly, that's just a flawed metric for a company like this. Here's why. A PE ratio is all about earnings, but high growth companies like Dutch Bros are all about revenue growth. They're spending every dollar they can on building new stores and expanding their brand, which means their earnings are going to look low. The right ratio to look at for a growth stock is a price to sales PS ratio. The PS ratio for Dutch Bros is only around 5 or 6. Now let's compare that to a company like Meta, META, which is growing less than 25% but has a PS ratio of 11. Does a PS of 5 or 6 sound rich for a company growing revenue by over 25%? Not even close. I rest my case. Conclusion. So to wrap it all up, we've got a company with a proven business model that's taking market shares from its biggest competitor, a super bullish chart pattern showing a great entry point, and huge catalysts like a CPG line and the energy drink trend, plus the stock is not nearly as expensive as people think. This is why I'm keeping my eyes on that $58 to $59 level to buy this stock. It's a long-term hold and a chance to get in on a winner before everyone else figures it out. This is not financial advice. Do your own research. It's your money, your responsibility.
I want to talk about expansion plans because I know you've been growing and you've been growing aggressively, and I want to know how that is continuing here and what it means in terms of where you might head next.
Yes, we have our internal rallying cry, which is 2029 and 2029. We're just over 1,000 shops today, so that's a lot of growth in the next couple of years. We'll add at least 160 shops this year, and we continue to open in new states. We just opened in Georgia. We just opened in Indiana. We opened earlier last year in Florida. So we're really growing across the country now. As far as what's going on, I think what the customer wants today is they want an awesome beverage and they also want an awesome experience. And I think our teams are just doing an incredible job of delivering on both of those things. Our founders were actually dairy farmers, and so we developed the protein milk with all of our dairy partnerships. And it's something that we have in all of our shops.
I'm wondering about your evaluation of the competition at large right now. We know Starbucks is leaning into revamping its cafes and really inviting customers in. Dutch Bros is known more for its drive-through, but also adding in that hospitality. So what do you see as the biggest opportunity and challenge moving ahead?
Yeah, so as we look forward, the beverage market is really large. It's growing well. We've been around since 1992. We grew up in the Pacific Northwest. So there's always been a lot of competition in the beverage market. And what I would say is I think it's important to really have a strong point of view. Ours is definitely in that drive-through space. We deliver speed, quality, and service every single time for our customers. And I think that beautiful connection that we have with a lot of convenience and quickly is something that the customer really wants right now.
But the data speaks for itself. Drop in the comments below with your thoughts and if you are buying the dip. Peace out.